This week's going to be a huge week for the market, starting with Jerome Powell's speech at the National Association of Business Economics. So far, he's speaking right now, and a big takeaway I had was that he thinks that the economy is in good shape, but just because that the Federal Reserve cut interest rates by 50 basis points just a couple weeks ago, that doesn't mean that 50 basis points will be the norm going forward. He says that look, they're on pace to achieve a soft landing. Inflation's going down and unemployment's going up, but not falling off a cliff. However, my big takeaway is that him taking away that 50 basis point cut, or at least not guaranteeing it, is what led the market to sell off, at least after those comments. But overall, he said if the labor market deteriorates more than expected, then we could cut more. And if inflation resurfaces and economic growth is still very resilient, we could cut at a slower pace. So he left the door open in data dependence. And then we also have more economic data points this week. We have jobs numbers on Friday. We have the September jobs and unemployment report number on Friday. And then we also have the JOLTS job opening numbers and the ADP private payroll numbers, which are other job number reports. On top of that, we had China have their best day today since 2008. Stocks were just at Chinese stocks were just at their 52-week low just a few weeks ago, and then China unleashed massive stimulus, pumping money into the economy, and now the Chinese stock market's in a bull market. We had JD.com, we have Baidu, Alibaba, PDD, and NEO all do really well the past week after China unleashed and unveiled their massive stimulus program, which helped propel the Chinese stock market. We have hedge fund manager David Tepper went on CNBC just a few days ago saying that now with this Chinese stimulus, buy everything in China. That's what he said. He also made a similar call back in 2010, shortly after there was more clarity after the 2008 recession and the market was starting to recover. He said back then, buy everything. And now he's saying buy everything for China. So this is his words, not mine, but something to keep in mind. Global liquidity is obviously on the rise again. More money in the economy. The cost of capital is cheaper. If interest rates are lower, loans are lower, there's more money flowing in the system. Asset prices will do well. Stock markets will do well. Gold should do well. The unfortunate thing is that the dollar will be debased. So unfortunately, this will reward investors over savers because investors, when there's money printing and more global liquidity, that pumps up, as I said, asset prices. And then as the purchasing power of the dollar declines, and as with dollar debasement, with this money printing, the value of a dollar that you're saving is actually worth less. So it's important to be an investor rather than a saver in this environment. But overall, I'm pretty bullish, as I said previously, for the until year end. Obviously, there could be some geopolitical concerns and perhaps tensions going on and uncertainty with the election coming up. But overall, I'm still pretty optimistic, and don't fight the tape and don't fight the trend. The market's doing very well. And when an object's in motion, it usually keeps being in motion. So don't fight the tape and don't fight the trend right now.